All right, everyone. Hey, good morning. Welcome to the trade findings and adjustments for the 16th of September. I found it quite interesting that recently I have heard quite a bit about what we're doing, why we're doing it, how we should be doing it in regards to everything all the way across the board in money. Let's go down to here. And money management. And I did find it quite interesting because for money management, most recently, and this came from the CBOE, it came from a CNBC survey. It also came from the state of Utah Securities and Exchange Division. But what do you think, if the question is asked, what do you think the number one answer was for what people were looking for in choosing a money manager? And it was like 10 to 1. This was 10 times the number 2 answer. But what do you think the number 1 answer was for what people are looking for in choosing a money manager? Profits. Dave, that's an interesting one. Profit. That probably would have been my first one too, right? Making money. That's what's most important. But that is not the correct answer. Mary, closeness to the individual, which is funny you're saying that because, Mary, you're on the East Coast. I'm in Utah, and the money we manage for you, I don't even think we've met each other yet, right? We've talked via telephone. We've done Skype when you were overseas. But closeness to their money manager is also a relative thing that maybe technology nowadays has taken that need for that closeness to not be necessary. So that actually was not even in the top 5, but I can totally see where you're going from. Has interest in growing money, not managing it. So there we go. There's another one. Portfolio growth. Jim Kohler, I love this guy. He's like, hey, it's not a percentage return. It's portfolio growth. It's portfolio protection. I love it. That was in the top 5, but that was not the number 1 answer. And I don't know if you're going to get it because I wouldn't have got it. But the number 1 answer was being, and I'm going to quote it here, was being educated on what their money is doing. After 9/11, after 2008, people want to know, they want the education on what their money's doing and how it's moving. So I found that very interesting. And Ida, you said trustworthiness. They actually used the word integrity and honesty was the top 5, but that was like being educated on where what their money is doing was number 1, 10 times number 2, and trustworthiness and that so forth was down like number 5. People want to know after a 2008, 2001 9/11 crash, the 2003 crash, People want to know what their money is doing. I would have thought how much they're being charged was in there. It wasn't even in the top 5 either. They want to know what they're doing. So I actually have some links here, and I'm going to go over each one of those links because yesterday morning at 7 to 7:30 my time, 9 to 9:30 Eastern, Squawk Box came up with some huge, or I don't know, I just sat there for a half hour and I just listened enthralled with the information they were giving and why it was so important. So I'm going to go over that today with you guys. I'm going to give you a bunch of links to videos that you can click on and listen to what I listen to, and little 2 to 3 to 5 minute videos here and there. But I found it just, once again, I feel like the talking heads have listened to what Hurley Investments has said, and they started to talk about it because it's rather important. Robinhood came up. Robinhood and free trading. That's going to be the #1 link you see up there. And what they said came down to this, and you'll be able to click on the video and hear it. But Robinhood and free trading does not mean better execution, does not mean best pricing. It does not mean it's better for your account. Gary Gensler really spoke and tried to people understand there is no free lunch. Anyway, there's no free lunch in the world of investing today. And as I listened to that half hour, he really went to town on what a poor brokerage house they were. And to the point where they give college students $15. Their Robinhood is basically, and how do you say this? He said, Robinhood is perpetuating the losing investing strategy of day trading. And I sat there and I was like, oh my gosh, did I just hear that right? Did I just hear him say that? And here we have one of the Fed chairs that basically, not basically, outright said in plain English on how day trading is a losing strategy for investing, and how Robinhood is perpetuating that day trading mentality through the college kids that are heading to our universities. That is their biggest source of finding new accounts. It's also why the average account size is so small. If you guys can remember, go back to your college years, right? We were all broke. We couldn't get two pennies together sometimes to pay rent, to pay our food. For those of you that may have been in a sorority or a fraternity, let's face it, sometimes we were struggling to find the money just to buy the beer for the party that night. I loved the comments that Gensler made in regards to, hey, not only are people not smart in using Robinhood, not only are they ripping you off on the spread and the pricing, Not only are they targeting the least educated market that's out there, which I would have thought would be teenagers, but apparently it's college kids. They're perpetuating the use of a losing investing strategy of day trading. It floored me to hear a Fed chair state that and talk so negatively about Robinhood. Very interesting, very interesting. Crypto comments. I was shocked. I was shocked because of the uncertainty that they are a viable security would be the best way to say it. That a Fed chair told you it doesn't take the place of gold, it doesn't take the place of dollars. Actually, I think it was, well, I don't know. I got to find it. But another chair came out and basically said that even if they could do what they were going to do, they would be regulated out of existence by the states. But we have a Fed chair calling them not a viable security, that there's nothing backing them, that right now it's an idea. And it doesn't mean you can't make a lot of money on it. But his fear is that it's a fad and it's not going to be around for a significant period of time. The other comment was cryptos are not doing anything to protect the owners of the coins. I can't think of another security that would disappear out of your brokerage account, that would disappear from the broker, that $600 million could disappear, and that they're not FDIC or SIPC insured, and it's shocking. Jim, I'll answer that here in just a bit. It is absolutely shocking that people are still gambling with coins, with crypto coins. Let me put it that way. And then, last but not least, I found out a whole bunch more on SPACs and the way how would I say it? And the way the creators are ripping off everyday investors. And let's just go through this. If they don't find an acquisition, right? In the 3 years, you think you still pay them for it? You still pay them closing costs, startup costs, and are the last to be paid out. As I heard him talk, I swear it sounded like a bankruptcy. It's ridiculous. The way that they are structured, which is called disclosures, right? Disclosures are inaccurate, meaning the returns are pie in the sky without data to support them. The big VCs, venture capitalists, right? Initial investors, and I'm going to say founders get paid their money first as a loan and interest before you get paid the gains. So understand their percentage return, the people that first started, that put the initial 50, 100 million in, they get paid before you guys get paid out of any gains, and they eat up the majority of the gains because they took the risk first. Not that you guys didn't take risk, you took equal amount of risk, but because they took the risk first, they get paid out first. When I realized the payout schedule and what Gensler told me, once again, I was floored. I was absolutely floored. So, just a heads up. So we are protected on just about everything right now. And still at Hurley Investments, though, so I should say at Hurley Investments, we are still looking to take profits by the end of the year. And the reason why? Higher taxes. Higher tacos, almost put higher tacos in there. Higher taxes. Which begs the question that someone asked. Right now, I'm just going to say the administration, which is also the Democrats, right? Let's just face it. The Democrats would like the rich, which is themselves. So understand there are a lot of loopholes. Would like the rich to fund their, how do I say it? Their idealistic programs to help the poor. And again, there's nothing wrong with helping the poor. By golly, if you have extra, I think it's a good thing to be able to help those that maybe can't help themselves, right? I get it. I understand it. But to deal with tax dollars and unproven strategies and unproven methodologies and unproven thought patterns, I can't help that they are buying votes, just like giving away iPhones and I don't know, giving away my money that I pay in taxes. I just haven't gotten on board with welfare. I'm not saying there's not a place for it. There is. But the way that welfare is administered right now and used truly doesn't help a person long term. In fact, it makes them more dependent on the government and less dependent on themselves to be able to pull themselves and get themselves out of a welfare-like situation. So if I was looking at positions, 66, we're down about a third, 30% on a 0.43 3%. Apple, towards the end of the year, we have quite a few leap long calls right now. And the leap long calls are, as a whole, up $4 or 20%. Kevin, you're out 20%. You should just take your 20% and run. I disagree. We know Apple runs into the end of the year. We know they run into the closing of the year. They sell more iPhones. I would really like to sell this closer to the $30 mark. That's what I would like to do. But I am looking at Apple this year and all those leap calls to getting rid of those, which would be about $418 million right now. Probably looking at that getting off our books at about a $500,000 50% profit or return is what I'm looking at. Boeing just has to move. Everything's out to January 23. We have some January 22s. We're most likely going to be closing those down and redistributing what little money there's left there. In fact, let me go to Ford. Ford's a good one. Ford's not moving the way that we had planned. And someone talked to me recently, hey, we've got some calls here, right? We've got some calls here with a cost basis of 197. They're worth 197. They're actually worth 198.5. But Ford might not move like we want it to. So it's time to take that money, and for all intents and purposes, today being an up day, we need to buy ourselves some more time. So we would adjust or take those leap calls, sell them. We would add some January 23s to those ones. $12 means we're going to get them at $3. So we need to make this a little bit different. Maybe we're going to go down to 8. We're actually going to go down to 7. So that way we're only going to spend another $225, and we're just going to take what's left of that money and we're going to push it forward in time so that we have the opportunity next year to make those profits that we didn't realize this year. Facebook, we're trying to do everything we can to get Facebook taken away at 400. I'm glad we have protection on. I'm glad our puts are making up, 80% of the downward movement. The calls are also making up some nice money. We're doing really good on Facebook right now. First Solar, got to take our profits. What we spent $18 is now up to 24. Got to take those profits off of our First Solar calls. Probably going to do that just around our earnings time. In fact, if I go to the other group, I think we've got like tons of First Solar calls in here. $32 contracts that we need to grab as much of that as we can and book that profit. Visa is also normally a Christmas year run. No more in shares, just in the calls. Definitely looking to take some of these positions off for any profits we can get. They're all January 23s except for one covered call strategy. So our thought process is, with the fear of rising taxes, this is the year to take profits and hold more cash going into 2023. It's really just a no-brainer. So with that said, that's all I have for you today. I would not be putting a new trade on. I'm glad to see that right now we look like we were calling things to the downside correctly. And with that said, are there any questions I can answer for you guys today? Good question, Dave. Boeing, we took some protection off at like 222. It went down to 211, now coming back up to 214. We're sitting on Boeing, and Boeing is nothing more than a technical play. So if you look at Boeing on both FinViz, Boeing is holding its uptrend line, and it has broke it, but we're right there on it. And Boeing also it has to the 223 50-day upwards movement to get to where it needs to be. Downside risk is 205. We're kind of in no man's land on Boeing, so we don't just throw stuff on positions when we're in no man's land without a direction or a way to go. Really, people could say it's building a base right here, which looks really good. With that said, it was building the base up at 220, and now it's building a base at 215. So we're going to sit on it for a little bit. We're going to sit and not randomly throw options into accounts without a direction or without a conviction of where we see it going. Great question, Dave. Any other questions you guys have? All right, if not, I hope this was helpful. Since we're not talking about an individual trade, pretty easy for me just to post this. I'll have this up sometime this afternoon. Do listen to Gensler and his comments. There are 4 videos here. I might add a couple more in here, but there are 4 videos, 2 to 6 minutes long. Very interesting to see what a Fed chair thinks of crypto, SPACs, execution and Robinhood trading. All this is I found it for a half hour. I was glued to my radio. I couldn't believe what I was hearing. And credit to a Fed official for calling the kettle black, so to speak, right? Pretty darn impressive to hear him call it and tell it like it is. All right, you guys take care. Appreciate you being here. Have a great weekend, and I will look forward to talking to you on Monday. Goodbye, everyone.